Okay, so a quick recap this week. The S&P 500, you can see right where my cursor is, I'm going to zoom in on this, really took off, and it happened right here on November 1st. That was Wednesday. So what was it Wednesday that drove the price action? I'm going to change the chart to a 3-day chart, 30-minute. So right where my cursor is, each one of these candles is 30 minutes, and I'm moving forward right here at 2 p.m. Eastern. This is when the FOMC released their decision on interest rates. And as expected, interest rates weren't raised, and the market had an initial positive reaction. Now, recently, every time the Fed has their press conference 30 minutes later, they say something that spooks the market. They say something that might be a little bit hawkish. Hawkish meaning aggressive monetary policy, so raising interest rates, and we've got to do things to control inflation. And that tends to spook the market. And so the history is that 30 minutes later, the market comes down. It's kind of what I was expecting, but this time they came out and they were very careful with what they said. In fact, they said, we're not even thinking about raising interest rates. The market loved that. And right here where my cursor is, that was the beginning of this huge upward move. So the end of the day on Wednesday, we're up. Thursday, gapped up at open, ran upward the whole day. And then look at this. Here's Thursday's close where my cursor is. And then all of a sudden we have today's open. Gap up again. We continued up throughout the day. So what was it about today that got the market moving? Well, it was the jobs report. So let's go into our Forex Factory and let's see what happened today. The unemployment rate ticked up, went from 3.8 to 3.9. And basically, it was fuel to the fire with stocks continuing to rise because there was a terrible jobs report, which gave us the strongest weekly performance of the year for all the major averages. So investors were already pretty happy about the prospects that the Federal Reserve might have concluded its series of rate hikes with what we saw the end of the day on Wednesday and throughout Thursday. And this week, we actually had the best week since the previous October. The NASDAQ and the S&P 500 were both up over 5% this week. So here's one of the things about the jobs report that we had this morning. So here's one of the curious things about the jobs report this morning. The discrepancy between the number of employed individuals and the number of jobs hasn't ever been more pronounced. So that raises some questions, some serious questions about the reliability of these figures. Over the past 6 months, the U.S. has reportedly added 1.2 million jobs, yet only 191,000 people have found employment. So this can partly be explained by the record number of people holding down multiple jobs. In October alone, the count of people juggling more than one job hit a record high of 8.5 million. So basically, this trend suggests that a lot of Americans are taking on additional work to cope with, you guessed it, surging inflation. And that contradicts the narrative of a robust labor market. So all that sounds like really bad news, and you know what? It is. But it actually is bullish for the market in the short run because it signals not only a pause in rate hikes, but imminent cuts. So before we go back to our chart and try to predict how much momentum the market has and what to expect for next week, let's first start with the Forex Factory calendar to see if there's any major announcements coming up. So You can see that next week, and we're looking for the folders, red meaning it should have a higher impact on the market, and we're looking for the US dollar. Anything that affects the dollar is probably going to have impact on the stock market. So Monday, nothing really happening here. Tuesday, you do have somebody from the FOMC that's going to be speaking. I don't think the narrative is going to change, but you never know. Now, Wednesday and Thursday, you can see that Chairman Powell is going to be speaking. Again, I don't think he's going to come out and surprise the market with anything super hawkish, but you never know. And that can have an immediate impact on the market. So Wednesday, he's speaking. And then also, if you go into Thursday, you can see that he is speaking there. And there's some more jobs data. We should still continue our upward trajectory. Even though we might be overbought in the short run, maybe some consolidation, maybe a little bit of a pullback. But I think the way we started moving this week has some good bullish implications for the market, at least going through the end of the year. December, there's going to be a lot of data coming out, and that, depending on how it looks, could slow us down a bit. But December generally, historically, tends to be a bullish month for the market. You get that Santa Claus rally. Friday, you're going to have some consumer sentiment, but I don't think we're going to get any major impact on the market next week with news announcements. It was this week that everybody was looking forward to. Now the writing is on the wall. We see which way the market's headed. We could be overextended a little bit in the short run, but I wouldn't expect any major pullbacks. So as we go back to the chart of the market and focus on it, you can see that it has broken a trend line that I've got drawn here. That's a good sign. The MACD indicator, let me just zoom in so you guys can see this a little bit better, has just given us a buy signal. In fact, yesterday, the MACD, which is an indicator trying to gauge momentum in the price movement, gave us the actual green signal, which is a buy signal. If you scroll down a little further and look at this RSI, it's on its way up. It gave us a buy signal a few days earlier. Now, a lot of people are saying, okay, well, the RSI is getting up into the overbought region. Just because it goes overbought doesn't mean that you sell all your positions, but you can be a little extra cautious. You can lock in some of your profits. Sometimes we go into the overbought region and we stay up there for a long time. So if you hit any major trends in the market, this indicator, all your market sentiment indicators like the stochastic or any one of these could go overbought and stay that way for quite some time. So it's on its way up, and that's a good signal. And you'll notice that I've got a 50-day moving average on this chart. That's that little light blue, that teal line. And the market generally has a problem. In fact, a lot of stocks have a problem at that 50-day moving average, especially when it's sloping down like this. They get overextended to the downside. They move back up to that 50-day moving average. And if it's sloping down, they bonk their head and they come down even further. Lower highs, lower lows. Well, this time, the market came right up to that 50-day moving average, and with some extra firepower, and it's the firepower of Wednesday's interest rate announcement and today's jobs data, basically the outlook on interest rates. That was the firepower that caused us to break through the 50-day moving average. With this move up, with this strong move up, while we might be a little overextended to the upside, there's still some positive momentum in the market. I'm going to show you just a couple of stocks that I'm paying attention to. And I mentioned this one in the community, Ghost Trades News, Camping World. You can see this long, protracted downtrend. The stock was just getting beaten down. And then they come out with earnings. They were halfway decent. And you've got a good company, solid fundamentals. They pay a dividend. And there's initial excitement on the earnings. It jumps up really big. So naturally, we're going to get some profit taking, some consolidation, but this could be the beginning of a new uptrend for this stock. In our live class on Monday, we talked about this stock right here, Palantir. It's an AI stock. It's on a lot of radars, and their earnings were pretty good. A lot of excitement about it. In fact, I want to point out the volume. When you see big volume like that, it's not the little guys. It's not us retail investors that are causing a lot of volume. It's the big institutional investors. And this is like them kind of showing their hand at poker. So when the big guys are buying, it's easy for us to really piggyback off of what they're doing. So big surge of buying on the earnings. The stock might be a little overextended. So don't be too surprised to see some consolidation, some pullback. But just like Camping World, this could be the beginning of a new uptrend. All right, enough of just the high flyers. Let's take a look at a big company like Exxon. One thing that I've noticed here with Exxon is a bit of a double bottom. That could have very good bullish implications. However, we are down below the 200-day moving average, and you could even see kind of a potential reversal pattern forming for those of you that have done some work on chart patterns. Maybe that's a head and shoulders. So watch what happens at this level right here. If Exxon breaks below it, we got some problems. But I'm also looking for a little break to the upside. If you were to draw a resistance line, and you got it something like that, connecting those last two highs, if we can break through and close, in fact, I'd probably play it safe and say a break with a trigger at about 110.50. If we can get past that point, you might have a bullish trade on your hands. So this is definitely one to watch. So whatever the market decides to do next week, at least get out there, paper trade, practice, put into practice some of the strategies you're learning. Good luck and happy trading.